Now, we know that financial exclusion affects millions of our fellow citizens, with many now facing economic hardship as a result of the pandemic. Now, some of us may have saved on the flat whites and the tube fares during the various lockdowns, but more than a quarter of UK households report they've lost income during the pandemic, and Debt Charity's Step Change has estimated that 4.3 million people were behind on household bills even before the impending cost of living crisis really starts to bite. And as we emerge from the pandemic and government support measures and creditor forbearance are withdrawn, many more will be struggling. The pandemic has worsened financial exclusion greatly. Now, the Commission is concerned that without measures to increase the resilience of UK households in the form of insurance, savings, access to affordable credit and financial capability, the aftershock of this crisis could be worse than the earthquake of the pandemic itself. Now, tackling this is crucial to achieving Level Up, which is a central plank of government policy, as we saw from the white paper published a couple of weeks ago. But for millions of people, as we know, this is more than an academic discussion or a policy debate, it's their lived experience. So before we hear from the Minister, we wanted to share with you a short clip provided by Fair by Design and Toynbee Hall about the way in which financial exclusion generates a punitive poverty premium.
So 2 years ago, I was working as a support worker at the time, loving my job. And then I got the devastating news that I had thyroid cancer, which meant I had to stop working. And my whole world changed. Just before I was diagnosed, I had looked at my electricity and said I needed to change it. I had a pay-as-you-go meter, and it was really hard. You know, I was putting in just my electricity alone, sometimes £40 a week, £40 a week on my gas. Because I was paying out more for these things, it meant that other things I just couldn't afford to buy outright. For example, my washing machine broke down and I couldn't afford to pay for it all in one go. So I took it from a catalogue and paid it monthly. And then I found out that had I bought it outright, I would have paid almost half the price for it. And had I not been on a prepayment meter, I wouldn't have to do that. My friend, who both her and her partner work, so we speak regularly, and she told me how much she pays for her gas and electricity. And when I told her how much I paid for mine, she was really shocked that pay-as-you-go was costing me so much. I feel it's very unfair that they're charging different amounts, because for me, I believe that we're all using the same electricity and we're all using the same gas. Why should one person pay more just because, you know, they have to pay for their electricity or their gas in advance? In fact, for paying for it in advance, you'd think that they should pay less. I had to wait a long time paying as a pay-as-you-go customer until eventually, you know, they trusted me enough to finally give me a credit meter where I pay by direct debits and the bills are cheaper. But during the time when I was paying on a prepayment meter, it was colossal. I think companies are doing a lot more than they used to, but nowhere near enough as they can do. They need to do a lot more. We have the same basic needs. So why is it that if we're utilising the same resources, why should, you know, somebody who is, you know, in a really vulnerable position pay more?
Well, I think that brings it home to all of us why we're here, doesn't it? And Paulette also recently told Toynbee Hall that she had paid £900 in interest for a £1,000 loan, £500 more than her sister, who took out the same sort of loan but had a better credit score than she did. Now, when the Commission was established back in 2014 under the leadership of Cheryl Cooper-Coles, one of the measures we called for was for financial inclusion to be included in the specific remit of a government minister. Now, it's like waiting for a bus, isn't it? You wait ages for a financial inclusion minister, and then two come along at once. And we're very lucky to have Guy Opperman in DWP and John Glenn in the Treasury, each overseeing financial inclusion strategy. Both are energetic advocates of measures to promote inclusion, as we'll hear now from the Right Honourable John Glenn MP, Economic Secretary to the Treasury, who wasn't able to join us in person or even digitally in that respect, but who has sent his address by video, and we'll see that now if we may.
Hello everyone, I'm very sorry that I can't be with you in person today, but I wanted to leave a message for you. Financial inclusion and how we maximise access to financial services and products is one of my highest priorities as Minister. And I think it also involves some of the most fulfilling work that I've done during my time as Economic Secretary over the last 4 years, as I've co-chaired the Financial Inclusion Policy Forum. While this summit is testimony to the fact that there is a growing and wider understanding of financial inclusion's importance to society and the economy at large. But from my perspective, financial inclusion matters today more than ever, and that's for a number of reasons. I think we can say that following the pandemic, the way that we manage our money has changed, and that's meant new opportunities. But we also have a responsibility to make sure that people aren't left behind. Secondly, I see financial inclusion as integral to the government's work of levelling up the country. Undoubtedly, helping people to access financial services is the right thing to do if we are to build a more equal society where everyone feels that they have a stake in our economy. Of course, there is some distance to travel, but I'm proud of the progress that we're making, particularly over the last year. So let me take a moment to update you on some of the progress and advances that we've made in the last year. I think we all know that access to fair and affordable credit can be life-changing for everyone, helping people to build a better life without worrying about the burden of problem debt. And that's why we're continuing work with our partners, Fair for All Finance, to distribute funding from dormant assets. And this money is being used to help in part to get people to access affordable finance. You might also remember how in March the Treasury provided £3.8 million to a pilot of no-interest loan scheme for vulnerable consumers. That pilot has been designed by Fair for All Finance with lenders, and it represents a crucial first stage towards developing that permanent scheme. Now, I was delighted that this scheme reached a major milestone earlier this month when the first loan was approved by South Manchester Credit Union. Now, we're still in the process of inviting lenders to take part in the scheme. There's been strong support, including from JP Morgan, which has pledged an additional £1.2 million to the initiative. This is money that will allow us to increase the size of the pilot with an extra hub in London. We expect the scheme's full rollout to start at the end of this year. But I'm really hopeful that this will grow and it will become something that is used everywhere. But we shall see how that progress works in the coming months. But as well as access to affordable finance, we're also giving people new tools to deal with problem debt. In May last year, we introduced our Breathing Space scheme, and this major initiative will give people a 60-day period where most fees, charges, and interest are frozen, and enforcement action is paused. This gives people the chance to find a solution to their financial difficulties. And we know that there's a link, sadly, between mental illness and financial struggles. So we've said that for anyone who's suffering from a mental health crisis, they can use this scheme throughout their crisis treatment period, plus a further 30 days at its end. Again, this will allow people to focus on their recovery rather than worrying about their finances. Now, Breathing Space is already starting to make a difference, with over 41,000 people accessing these protections in the scheme's first 7 months. And we're building on this work by developing a statutory debt repayment plan, which will give people a manageable timeframe to pay what they owe, easing some of the financial burdens upon them. We plan to consult as soon as possible on this and lay regulations by the end of this year, and then we hope to launch the scheme very early in 2024. I want to talk about access to cash as well, because that's another important element to the work that we do to boost financial inclusion. Now, we all know that digital payments bring us many opportunities, but I'm acutely aware that in a world where 8 in 10 consumers use contactless payments and 7 in 10 online banking, notes and coins still play a hugely important part of the lives of millions of people in the country. And that's why we've committed to legislation so that access to cash receives statutory protection. And it's also why that in last year's Financial Services Act, we made legislative changes to allow shops and other businesses to offer cash back without a purchase. In addition, we've consulted on further legislation that will ensure people only have to travel a reasonable distance to pay in or take out cash. But clearly, this isn't something that government can do alone. Financial industry must play its part too. And that's why it's been really good to see the Cash Action Group. It's made up of UK finance and the largest banks, building societies, as well as leading consumer groups, collaborating on a range of initiatives in this area. And I think one of the most exciting projects to come from this work is the shared banking hubs. And that allows people to pay in and deposit cash, use over-the-counter services run by the post office, and get advice from a community banker. A few months ago, I visited Cambuslang, one of the 2 pilot hubs. And it was clear to me that this initiative is doing great things for the communities that it serves. In fact, so far, some £4.65 million has been deposited at Cambuslang and at the other pilot hub in Rochford in Essex. Local businesses are benefiting too, a significant proportion, so they no longer shut up shop temporarily if they need cash or want to deposit it. And I'm pleased to say that banks are now planning to roll out another 5 hubs with the post office around the country. Now, clearly, it's early days, but I do think this is a welcome innovation and a positive direction of travel. And I will continue to work hard with industry to make sure that this momentum is maintained and the degree of coverage is appropriate. Let me just briefly now touch on some of the broader work that we're doing. Clearly, over the long run, making progress on financial inclusion will depend on pairing the right financial tools and technology with the right education. FinTech, which we're world leaders, clearly has a central part to play, with its great potential to innovate and build products and services that will help people become financially included. And as a government, we're doing all we can to create the right conditions for the industry to grow and thrive. We've got a strong track record here. The UK was the first country in the world to roll out open banking, giving customers a secure way to share their current account data. In return, this has sparked the creation of countless new products. We're now focused on taking forward some of the key recommendations from Ron Khalifa's very welcome and thoughtful review of the fintech sector last year. That includes everything from a visa scheme that will help firms attract the best talent, and that will work efficiently, allowing them to find individuals at short notice, to a new industry-led centre for finance, innovation and technology that will overcome the barriers that exist to the sector's further growth and prosperity. And I would also point out that fintech firms now have greater freedom to test out their ideas after the Financial Conduct Authority extended its regulatory sandbox scheme. And we hope that this will generate even more products that will increase the numbers of people who become financially included. We're also taking forward the opportunities that our departure from the European Union framework gives us to review our financial regulation. Our proposals will ensure that financial services regulators are able to adapt quickly to new challenges, and they'll be able to effectively tailor regulation to better fit our domestic markets. And that will ensure that as new ideas and products develop, often very rapidly, that the regulators too can respond with agility. We in the Treasury will continue to work very closely with the Financial Conduct Authority on financial inclusion where it can support our work. But as I mentioned earlier, financial inclusion isn't just about giving people access to new products. It's about giving them the right knowledge to benefit. So we're working with the Money and Pension Service, which has recently set some goals to roll out more financial education for everyone, from reception-age children to pensioners. So I'll end my remarks today by wishing you all a productive and enjoyable conference. And I'll leave you with a final thought. While our subject is finance, it is people who are at the heart of our discussions today. A bank account for someone with no fixed address could be the key to their own home one day. A few pounds in cash could pay for a bus fare or social club subs for someone who is isolated. And fair and affordable credit could help a struggling family buy a desperately needed washing machine or cooker without expensive and unnecessary debt. So I urge you all to carry on making a difference to so many people's lives. I will do my very best to support you in every way that I can. So thank you for listening, and thank you for giving me the opportunity to offer some thoughts and reflections today.
Well, if we could ask the Minister's officials team who are with us this morning to pass back our thanks to the Minister for taking the time to record that for us, and also his offer of support at the end, which is very much appreciated. And we've got a number of people on the call who are members of the Financial Inclusion Policy Forum, which the Minister mentioned there. Now, following that address, I'm very pleased that we have Lord Chris Holmes with us, who was a member of the House of Lords Select Committee on Financial Exclusion, and together with 9 Olympic medals to his name, is also a leading proponent of the way in which FinTech can address exclusion, one of the issues that the Minister mentioned a few moments ago. And he'll give his thoughts on what the Minister has said and host a brief discussion from the audience. And I think we've got about 15 minutes or so for that before we give you all a short break. Now, we haven't asked Lord Holmes to answer questions on behalf of the Minister. That would be unfair. But we are joined by members of the Economic Secretary's official team who are here not to answer questions either, but to listen to the debate and feed back to the EST any comments. So if I may, Chris, I'll hand over to you.
Thank you very much indeed, Chris, and a very good morning to everybody. And it's right to start with a thank you to Chris, to Sian, to everybody on this call for everything that you've done to drive forward this whole policy area of financial inclusion, and for everything that I know you will do. As Chris said, I have the great good fortune to sit on red benches rather than having to carry a red box with ministerial responsibilities. And just as it was in school, so it is for me at work. I'm on the very back bench, right at the back of the class, but hopefully sometimes chiming in with something worthwhile to say. And as Chris said, I think it is worth reflecting that we are in a fortunate position to have not only Minister Glenn at HMT, but also Minister Opperman at DWP. It shows that the government is truly committed to financial inclusion. But as we all know on this call, there's so much that still needs to be done. And I believe 2022 has to be a big year for financial inclusion, not least as we come out of a pandemic that none of us could have ever imagined that we would have to come through. Three quick thoughts from me before I throw it open, and Chris will bring people in. If you can make your comments pithy, tight and short and to the point, that would be great. And as you've heard, we have HMT officials here who I know will take those comments back to Minister Glenn, who will certainly address them. First, I think we need to see a golden thread running through all the institutions and organisations who can have a positive role to play in financial inclusion. So from HMT, via the Bank of England, through the regulator, hats off to everybody who's getting behind the have regard obligation, completely committed to that, through the firms, to individuals. So you can see a golden thread of financial inclusion running through all of those institutions. Second, as you heard from the Minister, cash remains and will continue to remain important for the foreseeable future. Millions of people rightly rely on cash and should be allowed to rely on it. Cash matters, and it matters materially. Third, key role for fintech and technology. Not a panacea to all our ills, but offering some really neat solutions to some of the most intractable issues around financial inclusion. But it will be that combination of human-led, human-augmented, human-enabled technology together with cash and existing systems, everybody collaborating, creating, connecting, coming together to enable financial inclusion for the social, psychological, and economic benefit of all. One final thought. I happened to be listening to the late, great Kirsty MacColl at the weekend, and I know no one on this call needs to reflect on this, but if anybody in your travels thinks that financial exclusion or indeed inclusion is not for them, not something they'll ever experience, just give them this from Kirsty MacColl. From an upscale apartment to a night on the A train, it ain't that far. From an upscale apartment to the rats in the basement, it's not that far. That's a driving call for all of us. I know we're all on this call. So please, if you could wave your hands in the air, Chris will call you in for your comments. I look forward to hearing them. Thank you.
Well, thanks very much, Chris. And yes, that is salutary. And there was one former minister who said that we've got a large proportion of the population who are one broken washing machine away from exclusion and the impact that has. So can we have some indications from people as to what they would like to say? We've got about 10 minutes, I think, for 10 to 12 minutes. On the chat, we've already got Ben Perkins, who wanted to make a point. Ben, do you want to come in with that?
Yeah, sure. I guess my point was, and I listened to the minister's video, and he mentioned the need to give people more knowledge around financial issues to achieve financial inclusion. But my point was around, what do financial services organisations do themselves to help people understand in terms of the way that they communicate with people? And the Consumer Duty, for example, that's coming up from the FCA is a good step forward in terms of requiring more accessible communications. But even that is limited in some ways because it doesn't give very strict regulation about how that's done. It's more of a kind of faffy, do something and prove it, but not exactly what needs to be done. So I guess my point was, there's a limit to education if we continue to communicate in such a complex way.
Right, thanks, Ben. Let's take a few comments, and we'll, if we may, Chris, we'll ask you to add your comments at the end on the basis of what you've heard. We've got a number of commissioners with us, and one of those is Martin Kopak, who's been leading that campaign which Lord Holmes mentioned, which is for the FCA to have regard to financial inclusion. Martin, did you want to come in?
Thanks, Chris. Well, I'm really interested in some of the panelists answering the question later on, based around, as consumer organisations and consumer representatives, we are often told we have to collect data to such a high level to prove market failure before action will take place. But then at the same time, the only organisation who can collect the data is the FCA. And the FCA is resistant to move on anything that has a sniff of social policy elements. So they say, go back to the Treasury, for example. I'm wondering, from the panellists who will be speaking later, what their opinion is on our must-have regard to financial inclusion for the FCA to help close that loophole, especially interested in UK finance. Thank you.
Well, and also let's throw that question open more widely, Martin. Anybody got any thoughts on that now? We will be drilling further into that also later today, but also on a follow-up session that we've got in probably in March. But any initial thoughts that people have got on that, or indeed on the consumer duty issue that Ben raised? I can't see any hands, but I don't know if that's because you're not putting them up or because I can't see all the screens. I'm going to pick on someone if you don't put your hand up. Oh, Sean, you put your hand up.
Being helpful. Well, Martin noticed already that at Toynbee Hall we run a lot of work that is directly working with people with lived experience of exclusion. And working with Martin and Fair by Design, we ran a series of workshops around various issues, including what people who have direct experience of living on low incomes, maybe not having high levels of literacy or numeracy, maybe not having English as a first language and experience of exclusion, think about the duty. And, you know, one of the kind of key things is put yourselves in our shoes is a really tough call. And what does that mean? And, you know, some fantastic challenges back. One was look at your own staff. If you are a financial services firm or a regulator, look around your teams and ask yourselves the question, who across your team could advise on this better if you actually drew on their lived experience from their whole life rather than just their kind of formal job role? Secondly, recruit more people from a more diverse set of backgrounds, and then you'll understand what real consumers across the whole spectrum really need, and you'll start to be more kind of capable of doing inclusive design without having to bring in a fancy design agency, because your own teams will be able to understand the issues. And then lastly, I think, you know, Ben's point is well made, that we've always said that it's all well and good to create great kind of education, but actually education around financial services is always going to have to keep changing. So you can never really get to a place where everyone knows everything. Financial services and products have to be designed as simply as possible for the moment in time that they're going to be used. And so if you are trying to offer a product or service to someone who you know is unlikely to understand complicated language or complicated maths, then making it impossible for them to use that service without being able to understand complicated language and maths is really not serving them at all. So bringing that together, I think, is, yes, we know we're still asking a lot of firms, but if you think about it in terms of a journey and say, where do we want to get to in 5 years' time? What we'd like to see is a roadmap from firms saying how they're going to meet that duty over time. And that's got to include a more inclusive workforce, more engagement with a wider range of consumers, and more inclusive design. And wrapping around all of that is that call for the FCA to have regard to financial inclusion. Because if the FCA can't hold firms to account on this, who can?
Right, thanks, Sean. We've got a powerful point from Hannah Collins from Surviving Economic Abuse on the chat. Hannah, do you want to say something about that in terms of some of the underlying issues about how people get into debt in the first place?
Thanks, Chris. Morning, everyone. So in case you haven't seen in the chat, I just put there that there seems to be a lot of focus on lending and finance as part of the inclusion strategy. But perhaps we need to consider why people are in debt in the first place and look at ways in which we can assist or empower people to have a decent standard of living without having to rely on credit, which I think is hugely important. And I understand the kind of mechanism behind products and services that offer credit and financing, because let's face it, you know, banks and lenders need to make money, but also, is it not better for some individuals who are vulnerable, and indeed amongst the most vulnerable in society, to be supported to not have to rely on credit? I mean, as we saw in the lived experience video, the lady was saying about having to, you know, not having emergency funds to buy a washing machine outright. And I think the finance sector is perhaps part of a more coordinated community response in terms of looking at, well, what are the factors affecting why people don't have, you know, cash available to them? Is it the cost of living impacted by, you know, the pandemic and other factors, alongside things like redundancies, illnesses, geographical disparities? And then we look even further at the, you know, kind of micro details like differences in standards of living and poverty rates for Black and minoritized ethnicities. You know, there's a lot to unpack that goes beyond, well, let's make this lending affordable. And I'd like to hear more that speaks to that, whether it's from the financial industry or the government as well, because I think it all, ultimately, I think it all kind of lends into each other and all connects, really.
Yeah, thanks, Hannah. There's a lot of nodding on around the screen that I can see.
Sorry, last week you mentioned Rob Greenwood running.
Sorry, was somebody coming in on that one?
No, I think they were in the background. Sorry.
Okay, fine. Yeah, I mean, your point, Hannah, that you know, that for many of us, credit is a convenient way of smoothing our expenditure over time and filling the gaps of income. But for others, it's debt, and it's really rather painful. So I think that's a point well made. Just Emma's made a point on the chat as well. Lord Holmes pointed about the importance of cash, and the Minister did as well. And Emma points out to the loss of ATMs, and Link has done a lot of work on that. There's been some interesting work done by Sharon Collard and her team down at Bristol.
Let's try getting again. Let's try again.
Finally, could I just bring in Sian Milley? We're getting close to the time when we have to ask Chris to come back in, and then we'll give you a short break. But Sian, did you want to come in?
Thanks, Chris. Yes, I mean, every time I listen to government and Treasury spokespeople, and indeed actually in the fintech world and in Khalifa as well, the Khalifa report, the words potential is still being used there, Chris. And I as a fintech activist, but also as an inclusion activist, have a real issue with this, because the logic of building a system on the basis of what a segment could do and giving that commercial segment priority treatment because it happens to be something we're really good at, which we are in the UK, no argument, and I'm very happy about that. There's some logic there missing for me around, well, how long is this going to be a potential contribution then? Whilst at the same time regulation is being reshaped to help this particular segment, and by that segment I mean obviously we talk about fintech, but we talk about insurtech and pay tech and virtually every other kind of tech. I mean, there's credit tech as well. Basically, any technology that's applied to delivering products and services faster. If it's still potential in another 18 months' time, there has to be an end to when it's potential and to when it's actual. And just Martin's point about the amount of data that civic society activists have to prove a market failure. Where's the data to support this assumption, this hope, this aspiration, whatever language you want to put around it, that fintech is actually making a difference and even could make a difference, you know? So that, I guess that's just sort of amplifying the point that I put in the chat there, Chris. Hope that's okay.
Yeah, that's great. Thank you, Sian. And what I would recommend that we're going to give you a 10-minute break in a moment, but I would recommend that as well as filling up your coffee cups and whatever else you want to do in that time, you have a look at the chat, because there's masses of good comments in there, and a lot of people who are making a real contribution. So presumably we'll be able to capture this, Heidi, and maybe circulated afterwards. Do have a look now. Could I just come back to Chris for your final thoughts on some of those issues, or anything else you wanted to say, Chris, before we break up?
Thank you very much, and great comments from everyone there. On Ben's point on education, completely agree with that. And there's no question that for all of us from the earliest age, we need more financial education, and for it not just to be burdened onto the schools and teachers to do it, but for it to be cross-societal. But also, I think, as was sort of being hinted at, more than hinted at there, there's a bit of an issue with financial education as a phrase becoming somewhat value laden. And I agree, it has a bit where it sort of puts the onus on the other, and we other that other person. And that is problematic. And I think enablement, empowerment, unleashing, all of those are far better, but the need and that the opportunity is certainly there. That sort of ties into the points that were made around the asymmetry of knowledge and thus power that exists. And there's always going to be that, like it or not. But the more that one can push for plain English, unbundling, decomplexing, simplifying financial products and financial instruments, particularly in this space, more can and must be done in there. And on the final fintech point, I agree there's a bit of a dual problem going on at the moment. The potential is set out, which is sort of true in that the potential is extraordinary for fintech, which covers all that. And I agree with you, anything can have tech put after it. If you'd like to see Chris Tech, it's really good. It's me and the Pondy, so we're both on that one. But I agree, it's problematic because there is massive potential and we're not there with it. But it's sort of, by saying that, it puts in the shadows a bit a lot of the good stuff which is happening around the ability to have a different approach to credit scoring, to risk, to all those kind of things. So that there's great stuff happening. But I think the key to your point, Hannah, is that that needs to be scaled much quicker and across the piece. And as I said in my introduction, it's in no sense the totality of the solution, not a bit of it. But come back to cash. One final point, which I must mention, because I pushed the amendment on cash back without a purchase. Some of the brilliant data which is coming back on that, the majority of usage are for transactions for £20 or below, which was, even before the change in the problem of ATMs, a massively ignored and underserved piece of our, and critical piece of our economy. So really good piece of work done there. But I will shut up now because caffeine is calling for all of us, but I look forward to the rest of the day, the rest of the chat. And for all of you, if you do want to connect with me and put comments to me, I'd be delighted to hear from all of you now and in the future. But thank you. Let's get tea and coffee.
Well, thanks very much, Chris, and thanks for everything you're doing on the financial inclusion agenda. A great friend of the Financial Inclusion Commission